everyone's banking on Powell lowering rates, or at least that's what the scuttlebutt I've seen is. So, I guess if rates are getting lower, gold will go higher. But I don't even believe in that trade anyway. So, gold is going higher as far as I'm concerned because governments are buying it. There's a rush into gold because of the de-dollarization of the world. And it's got nothing to do with interest rates or anything like that. Listening to someone earlier talking about the Fed as well, that the Fed has been involved in manipulating silver prices down, and he was convinced that the Fed is involved in price fixing in silver, in the silver market. And he went a little bit to an extreme, I thought, but there's a lot of people out there that believe the governments are involved in the trading of these metals and are suppressing prices.
In today's episode, Keith Neumeyer exposes the gold-silver ratio and makes a deep explanation of how to trade this ratio to make bank. Keith is pretty bullish on silver and expects the precious metal to go as high as $100 in the foreseeable future. If you're into commodities, this video is for you. But first, subscribe and turn on notifications, as those who watch our videos are better informed. If you're thinking about adding Bitcoin to your commodities portfolio, check our pinned comment for some massive sign-up bonuses. Enjoy the video.
It's always such a hard thing to talk about because you don't want to be a conspiracy theorist. At least I don't like to be that. Markets trade where the money is, in my view. So you could call it manipulation if you wish, but I think it's just managing books, managing the financial system, and why they do it that way or what's behind it. Try to dissuade investors from buying precious metals. Back in the 70s when the famous letter was written about the COMEX of finally getting gold contracts in place. The government wanted those contracts in place to scare away investors, because they knew that once there was a paper market, they could then get involved in that paper market and manipulate the price. Like they did on Bitcoin, and that's why you can argue all you want, but Bitcoin had no paper instrument really until recent times. So it's become way more volatile as a result of that. Well, gold and silver are completely different. Gold is money, the granddaddy of all money, and as we de-dollarize around the world, which is obviously happening, gold is your hedge against de-dollarization. Silver is a strategic metal. I came up with that phrase over a decade ago. I've seen other people also repeat that phrase, but I came from a copper company. And so when I left that copper company in 2000, and I was looking around at what I should do next, and gold was obvious, right? But for me, there was just too many gold companies. I looked at silver, and I looked at the supply-demand fundamentals of silver, and I was amazed. And I said, this is like copper. And then I decided to put together a silver company.
On that.
Only time will tell. I've been in the mining sector for 35 years. I've been talking silver for 20 years. When I put First Majestic together, silver was $5. And I said at the time that I expected silver to go to its previous high of $50. It took 10 years to do it. It took longer than I thought, but it did get to $50. I didn't expect that it was going to go down to 12 after 50. That was crazy. And it's now been, then it's gone back and forth, and it's been stuck in this kind of $23 to $28 range for the last, I guess 2 years, which in itself does not make any sense. I'm a triple-digit silver guy. We're mining for every 1 ounce of gold, 7 ounces of silver. And so you do the math. Today gold broke through a new high, 21.14. It closed that today, which is fantastic. It's dragging it. Well, it will drag all commodities with it. Its silver was up 75 cents today to 23.75. But you divide 21.14 by 7. And that's where silver should be trading at.
Keith Neumeyer highlights that in a global economy, the gold-silver ratio serves as a pivotal metric, often indicating the relative values of these two precious metals. In today's episode, Keith Neumeyer explains that a high ratio suggests that silver is undervalued compared to gold, presenting potential opportunities for investors. Recently, this ratio has hinted at an undervaluation of silver, particularly interesting given the metal's dual role as both a monetary asset and an industrial commodity. As the world tilts increasingly towards green technologies, solar panels, electric vehicles, and myriad electronic devices, the demand for silver is poised to escalate. This demand is not merely speculative, it is underpinned by silver's irreplaceable role in high-tech applications, ensuring its consumption is both robust and expanding. However, the path to a higher silver valuation is not solely dependent on demand. The supply side presents its own set of challenges, says Keith Neumeyer. Silver mining, often a byproduct of other mining activities, faces hurdles such as declining ore grades and stringent environmental regulations. These factors constrict the supply even as demand surges, setting the stage for a potential increase in silver prices. This scenario is further bolstered by the green revolution. As economies strive for sustainability, silver's indispensability in green technologies becomes increasingly apparent, potentially hastening its journey toward the $100 mark. Now we'll show you more clips of Keith Neumeyer, but first like, subscribe, and turn on notifications. Also check our description for some massive sign-up bonuses.
You know, I was hoping it was going to go down to 10,000, and that was kind of my number. You know, it went up to, you know, whatever, almost 70,000. Yeah, and I was watching, and I'd even, and that was his magic number, right? So I figured, okay, I'm going to listen to him. Wait, when it gets to 10,000, I'll buy some. And I, of course, didn't get down there. It got to 15 or somewhere around there. And now it's back up to close to 70,000. And, you know, look, it's, you know, I don't really understand it, quite frankly. You know, we now have our own mint, and we're producing silver. We've been selling silver to the public, physical silver, since 2008. And we had our booth today at the PDAC. We've got silver all over the booth. And people are coming up and touching it, holding it.
Right. The demand is there.
They're amazed, but just holding a chunk of gold or a chunk of silver, it does something to the mental, it does it to your brain, because the amount of energy that's contained in that bar of gold or silver, it's enormous. But yet you can't touch Bitcoin.
It's something you can't explain, right? When you pick up silver or pick up gold, right?
Yeah, it's just it's a human thing. You just go, whoa, and you're just like, that's really cool. Financing, you know, there's not enough investment going into silver. You know, you know yourself. So you have a $1.2 billion or 1.2 billion ounces of consumption and 820 million ounces of production. That's a serious problem. So we're 6 years in to this deficit. The deficit in 2024 looks like it's going to be bigger than in 2023. And why is that? Because miners aren't producing enough silver for the needs of the human race. So we're adopting all these green technologies, all these new ways of doing things. No, you know, you still want your cell phone, you still want computers, you still want fancy cars, you know, and we want to electrify the planet in ways that you know, are going to be greener. And it's interesting because a nuclear power plant consumes a ton of silver. So anything green, anything that is involved in electricity consumes silver. And we're just simply, as a mining industry, not supplying enough. And that's going to affect prices, of course.
What do you think of Keith's bull case for silver? Will gold and silver have a massive bullish year in 2024? Post in the comments section your price prediction for the gold to silver ratio for the end of 2024. Subscribe if you have not yet done so, and watch this video right here because you'll love it. I see you on the other side.